Most investors track returns the wrong way. They look at share price, they look at yield, but they don't track where the cash actually goes. And that's where portfolios quietly break. In this video, I'm going to show you the exact system I use to track real income, real reinvestment, and real total return, week by week, across multiple funds. This isn't a backtest fantasy. This is what actually happens when distributions hit your account, and you decide what to do next. We'll walk through the sheet, the logic behind it, and why understanding cash flow matters more than chasing yield. Once you see this laid out week by week, it becomes impossible to unsee where the money actually goes. So stay tuned. Welcome back to Simply Money. So what we're doing here is I am sharing with you a cash flow engine worksheet. This was requested by several viewers. They wanted to know, like, if I hold ULTY and I get the distribution and I want to put a portion of it in other places, how can I track that? So I created this worksheet especially for them. I appreciate all of you that support the channel, not only with your viewing and your comments, but the suggestions that you make for different funds you want to see, and even worksheet improvements that you guys recommend. So I appreciate all of that support, and I'm going to walk you through this. If you like this, don't forget to hit the like and subscribe button, and if you want a copy of this sheet, you can get it in the Buy Me a Coffee link in the description below where all my spreadsheets are available. This is the Simply Money Cash Flow Engine. Now I have instructions over here in this first tab, and then you go to the second tab. This is the control panel. This is where you put in the bulk of your information, and you will see that the yellow cells are what you're going to be filling in. Anything not yellow, you don't touch. I have most of those locked so you can't mess it up. But ULTY is what we started with, so we're putting ULTY here on an August 8th, 2025 start date, and it automatically fills in here as your primary fund. Then you fill in your secondary funds, and I just put some in here that I have just to pull some of the distributions and different things in that I have. So you can put whatever funds you want in your second, third, fourth, and fifth funds. And then you're going to put here the percentage. This is the percentage that you're going to put back into the fund. So with ULTY, you're putting 25% back into ULTY. So if you get $1 distribution, you put 25 cents back into ULTY, 25 cents, 25% into SCHD, 20% to QQQI, 20% to Chippy, and 10% to SCHG. You can adjust these percentages. If you wanted to put it all into SCHD or QQQI, you can put that 100%. You can put 0 here. Whatever you want to do, all these, as long as it equals 100%. Your initial investment, I'm starting out just using a $20,000 initial investment. You can go ahead and have initial investments in these other funds if you'd like. That's if you're making this initial investment at this date. Now, if you made it prior to that, say you're going to buy into ULTY and then you're going to add to a fund you already have, you can put how many shares you had starting out. So say you had 1,000 SCHD shares, you could put that right here, and that will populate in the other tabs, and I'll show you that here in a minute. But this is for if you already own it, and then you want to start from when you buy the sheet. I want to start from the date that I get the sheet, tracking forward. This isn't back testing. This isn't looking backwards. So if you have funds before, you can just put those in here. Even if you already had some ULTY, you could put that in as well. Now this here is if you want to reinvest the distributions. Obviously with the primary fund, we have 25%. We want to reinvest some of those distributions. We're turning that ability on the tab, and you'll see that again in a moment. We'll go through all of that. With SCHD, not only are you putting 25% of ULTY's distribution into SCHD, whatever SCHD pays for itself, you're going to reinvest that as well. But say you didn't want to do that. You just wanted to build it up, but you're going to take whatever distributions they take. You can shut this off. So your SCHD distribution would just be put off to the side in cash. But I have all these turned on because you're going to feed it with funds from ULTY and its own drip being on 100%. Again, QQQI, we're going to reinvest its own distribution plus 20% of ULTY's, Chippy, same thing, 20% of ULTYs and reinvest its distributions. SCHG, we're going to put 10%. And I have that turned off right now only because I did not put any of the distributions that SCHG pays because they're so small. They're pretty negligible, so I didn't mess with that right now, but you could turn that on or off. Again, these are the things that you control at your control panel. Now we'll go over to the transactions. This is the area that you will maintain. This is what you will put in each time you get a distribution. Here you can see on August 15th, I have ULTY paid a distribution of $1.01. And I just have the drop down so you can pick out whatever fund you want and if it was a buy, sell, or dividend, and then the amount. If you buy or sell, you need to put the number of shares right here. And I have an example down here. We have on January 10th, 2026, SCHG, we bought 100 shares. So I just put 100 there. And on these tabs, it will show you everything that's happening here in a minute. I'll get to that. I'm just kind of walking you through, and we'll go back over some things in a minute. Now, a lot of people will ask, what happens with these drop downs if I change the funds? Those will automatically update. So if I went in here and I put in SPY, you come over here, transactions. Now you see SPY is there. So your choices, again, what you input is over here, and all you're doing over here is making the selection when you're getting distributions or dividends, when you're buying and selling. That is just your transactions. You have to maintain that. If you get a distribution, you want to track it, you need to put it in here. Otherwise, it's not going to feed these sheets. But it makes it very simple. So week by week, you just go in, hey, Chippy paid me a distribution on this date, and fill it in. That's all you're doing here. And so I have some, you can see I have some filled in for all of these different funds. And we're going to go through how that populates. So that is controllers. Those are the only two tabs that you're going to have to mess with. Everything else just shows you what's happening. We're going to skip the portfolio summary for now and go over to the primary fund. So again, primary fund shows you right here in L1. The primary fund is ULTY. And you can see it populates the dates, and it comes down. All this below is blank, but it has formulas in it because those are all just in the future. So it just leaves it blank until that time comes, and that just keeps it a little cleaner. With this, you can see what the share price is on the day that this is showing. It shows you the distribution amount. So we can see that our first distribution, and it goes in the week. So if it's not on this exact day, it goes into the week, and that's based on some formulas over here to the side. This is just the week that this was paid. Column D is showing you your start shares at this period, how many shares you have. So you can see it's accumulating as we're adding in these distributions and buying more shares. We have over here the distribution cash. So you get your distribution multiplied by however many shares you have. That's your distribution cash. And remember, we're only dripping 25% of ULTY back in. So that means I have $83.42 to drip. And that means I have $250 to route. Cash to route means cash that's going to go into the other funds based on the percentages that you picked. So this cash to route is what's going elsewhere. This cash to drip is what you're buying more shares based on this current price. And so you can see you get 0.01 share. It adds it here, and that's your shares at the end of the period. And column K is keeping track of your market value. And then over here, it's your net trade. So like I did here, I'll show you again. On SHG, I bought 100 shares. That would show up here as a buy in this column. And if you sold, it would show up in this column, P. And your net shares is, if you bought some and sold some, it would be your net shares. So you have your reinvestment and net shares, and that carries over to your starting shares in column D for the next period. As we come down, I just want to show you what ULTY's done. You can see that your $20,000 is now down to just under $12,000, and your distributions are getting smaller because you're having a smaller amount being distributed as that share price drops. We can go over to here to Fund 2, which is, again, L1 SCHD. We can see our dates, the share price. And then here in the distributions, because this is a quarterly payer, you can see our first distribution that we have showing is October 3rd, 2025, 26 cents. Now, I want to walk you through here. So we started with 0. When ULTY pays a distribution, incoming cash shows right here. So we had $62 come in. We're dripping 25% of ULTYs, which is this, and this shows the amount that we chose to drip, which is 25%. And so this is the cash that's going back into it. It shows you the number of shares you purchased because we're just starting our position. And then your market value, your number of shares times your share price. We come down here, you can see the distribution from SCHD. So you have your number of shares you started with. You have your distribution cash, so that's from SCHD's distribution. And the incoming cash is from your primary fund. It's the percentage you chose to send over. And then this is the cash that you can buy that's combining the two of these. This is how much you're investing and buys you this many shares, and again, your accumulation. We come down to the bottom, you can see how this is just slowly growing as you're just transferring ULTY's distribution over to that. Same thing with Fund 3, we have QQQI here. Nothing different from this other than we're only doing 20% of ULTY's distribution into here. The amount's slightly smaller, and you can see your current balance and all that. I'm going to go through these real quick so I can show you a little bit more with this. The drip on this one, this is Chippy. We're doing 20%. As you can see, we're up to $1,000 and $1,094 on this. And then SCHG, we have that going on. Same thing, we have the distribution from ULTY coming over, so your incoming cash, you're buying more shares. And then remember I had shown the example of buying shares, which we have right here, 100 shares net. We bought 100. We didn't sell any, so your net is 100. And you can see how that increased right here, your shares ending, because you bought this 100 shares plus the reinvested shares from the incoming cash. So that jumped your total share period at the period to 113. And here's your balance. As we come over here now to the portfolio summary, what this is doing, again, same dates. The dates always align to where you started this, saying going forward, I want to start reinvesting cash and routing cash from this primary fund. It shows your primary fund's balance, Fund 2, 3, 4, and 5's balance, then your total portfolio balance here in column G. As you can see, that has been going down drastically, and we're going to use this as an example. We do have an increase here because remember I bought the 100 shares of SCHG, so it shows that increase of your portfolio balance. This H column is your total return of the entire portfolio. You can see a lot of red here. Started coming down when we implemented that buy, and your total return at this point on this is from beginning to end. And I know this includes what you've bought. This isn't pure return. There are certain limitations we can do on this. I will work on seeing if I can get that implemented as well. But I wanted to get this out to you and show you all the dynamic things it can do. So over here, what we have is the percentage of your portfolio that is in primary fund and Fund 2, 3, 4, and 5. As you can see, we started out with the primary fund had 100%. But as we begin buying in and transferring that money, we come over here at the end, you can see you're down to 63% of your fund is in ULTY, and then 6%, 5%, almost 6%. And then because we bought into this SCHG, that brought that up to 20%. With ULTY in this time frame, you can see it's been very detrimental to your portfolio. And I wanted to show you this because this is what triggered this. People were like, I want ULTY and I want to take the cash and I want to roll it into other funds. And you can see what's happening when you do that. Now I have, again, 25% of it going to ULTY. We could change that to 50% or 80% and see what happens. And we could play with that here in a minute. But what I want to show you now is we're going to change the primary fund to Chippy. and we'll change fund 4 to ULTY. Now we're going to assume that we have bought into Chippy as our primary fund, and we're going to buy some ULTY down here at the end and see what happens. As we come over here, the transactions haven't changed. I still implemented what distributions I received per share that you own. And we will go to the primary fund first. So this is now Chippy. You can see it updated it. We didn't change the start date, so everything stays the same on that. It updated the price based on that this is Chippy. You can see the end balance on this has done really well. You're up $2,456. Let's go over here to Fund 4. This is ULTY. We started with 0. We're buying into it. So you're kind of dollar cost averaging into this. As it's dropping, you're getting that cash flow in from Chippy's distribution. And you can see that you've built up here slightly to $471. What I wanted to show you on this, the impact, is looking over here at the summary. Remember how much red we had here on the total return. Now when we come down, when you do this in a different way, and this can show you how you can really maneuver your funding and your income and how it can impact you the way you route it, depending what you do with it, how bad it does or how good it does. With this, you can see that routing into here, the primary fund has done really well, and you've increased your position in all of these others, and that's brought our total up. We've gained $7,000. Now, again, $3,000 of that approximately is from SCHG buying, but even prior to that, you can see that you were up 19.46% from your beginning balance, and I should change that from total return to balance increase. That would probably be more accurate for those who are wondering why that is like it is. But again, so you see your percentage here. The primary fund on this scenario keeps more because it's growing. It's not shrinking. And these others are now growing. And you can do this until you get to where you want to be. Maybe you want it to where you're at, 25% on each or 20% on each. And when you get there, you stop. And then you take the distributions, whatever. There's so many different things you can do with it, and this gives you control of what funds you want to look at, what your primary fund's going to be, how you're going to reinvest, what percentage. What are your thoughts on this? Again, I'm using some funds that I have just for ease of putting data into here for you. You can put your own data in. If you have questions on this, feel free to throw me comments down below. If you have suggestions for improvements, I'll always try to do my best to implement those. If you like this sheet, please hit that like and subscribe button. It really does help us out. Maybe you don't want it, but somebody else will find it useful. And by you helping the channel, it gets to more people, and I appreciate that. What are your thoughts on this, watching this with this transaction routing? Do you like seeing how this does? You can see over here, I've added some charts for you. So you can see your percentage by fund. It's a little crowded right now because everything's down here, but you can see as we're going up, SCHG or Fund 5 is going up. Come down here, you have your balance per fund. We're going to look at that here. You can see that the balance of the total portfolio or your primary right here, and then you get these separate funds, and they'll begin to separate the further out you get, or the more you're putting into it. Here we have the total portfolio balance. That's the one I was looking for. So you can track that and see, hey, this method I'm using, it seems to be working. It's going up in balance, and you can see the increase right here where we bought some of the SCHG. It kind of shot it up a little quicker. And so you have some visual charts you can look at as well. That is the portfolio Simply Money cash flow engine spreadsheet, and looking at some of these funds and how you can play with it. The other thing I wanted to show you here, let's see if we turn off, we're going to go to 0 on Chippy, and then we're going to go to 100% on this, and we'll just do some zeros here just for the time being. All right. So here's a new update we want to just look at real quick. Let's say we only wanted, and you wouldn't have to put these other funds in here. I just didn't want to delete everything. So you can just change it to 100% and it'll do the same. So we're going to Fund 3. You can see that Obviously, you increase a little faster because all the money that you're collecting is now going in over here, and you're buying more at a quicker pace that way. You don't have to get rid of these distributions on funds you're not using. They just won't read. If you want to play with it and then go back in, you have all your distributions that were sent to you that you've already put in there. Again, you can see here the balance is lower in these other funds. They're at zero, but this actually, you can see it would grow faster doing this method. Again, there's just ways you can play with this and see what works best for you, what you like. If you want a copy, again, find that and buy me a coffee. I appreciate you, and we will see you next time on Simply Money.